Ever wonder how many LLCs and bank accounts you need to minimize your liability and streamline your business operations? In this video, we'll break down the essentials of setting up multiple LLCs and bank accounts and why doing so can protect your assets and enhance your business's financial management. So why multiple LLCs? An LLC or limited liability company helps protect your personal assets from business liability. Having multiple LLCs can segregate different business ventures or assets, reducing risk. For instance, if you own rental properties and a consulting business, separate LLCs can isolate liabilities specific to each venture. So how many LLCs do you need? The factors to consider are these. The number of LLCs you need depends on your business activities, risk tolerance, and asset protection goals. To run a business as a real estate investor, and what about family-owned assets? High-risk assets. And how many is too many? We want to put the most money in your pocket and minimize the risk of losing everything in a lawsuit. We want to keep the cost reasonable, but we also want to simplify your life. Plus, we want to minimize your tax. Finally, we'll talk about arguments that people have against multiple LLCs and my response. I like a balanced approach. Rule number one LLC and bank account per business venture. Use separate LLCs for different businesses to avoid cross-contamination of the liability. For example, if you own a restaurant and a consulting firm, each one should be under a different LLC. That way, if there's a lawsuit here that wipes that business out, it won't affect this business over here. Rule number two. One LLC per rental property. Each rental property should be held in a separate LLC to protect against the risks unique to each property. For example, a duplex in Miami in one LLC and a commercial building in New York in another. You don't want to have three rental properties and have a lawsuit on this property wipe out the other two. So by having each property in a separate LLC cubbyhole, a lawsuit on this property doesn't affect the others. Rule number three, for high net worth individuals, for maximum asset protection, that is those with at least $500,000 to $1 million in liquid, one LLC inside of an asset protection trust. This gives you the maximum asset protection for your liquid assets when somebody sues you. The LLC also gives you control of the assets in the bank account until you need the trustee company or law firm to step in to protect you. Now, there are U.S. trusts and there are offshore trusts. Based on my over 3 decades of experience in this business, I have seen domestic trusts protect assets about 67% of the time from an aggressive litigant. Offshore trusts, I have seen protect bank accounts about 99.4% of the time. In fact, we've set up more trusts in the Cook Islands than anybody in the world, and I've never seen one of our clients lose money from a bank account that we've put inside of a Cook Islands trust that we've established. Number four, one LLC for holding intellectual property. Use an LLC to hold patents, trademarks, copyrights, and other intellectual property. And then what you do is you license the intellectual property to your other companies. That way, when a company that's doing business with the public is sued, holding the copyrights, patents, trademarks inside of a separate LLC creates a barrier against business liabilities. Number five, one or more LLCs for business equipment and vehicles. Separate LLCs for expensive equipment or vehicles to protect them against operational risk. And then you can simply lease this equipment and the vehicles to your existing business so that when your business gets sued, it owns very little to nothing that can be taken away in a lawsuit. Number six, one LLC for high risk activities. Create a separate LLC for activities with high liability risk. For example, construction projects. Isolate these risks from other assets and operations. Number seven, one LLC for your personal use. For personal investment or assets, consider using an LLC for extra protection. For example, holding a personal investment portfolio or a valuable art collection. One LLC for managing family-owned assets. You can use an LLC to manage family-owned assets and investments. This facilitates structured asset management and estate planning so that when you die in your operating agreement, you can have a provision that the membership interest goes to your children. Number nine, one LLC for joint ventures. Form a new LLC with any joint venture or partnership with another party. For example, doing a construction project with one or more investors. Clearly define the scope or limit the liability of the joint venture, which is usually a short-term project with others. So what we're saying is by structuring your assets and operations with multiple LLCs, you can effectively separate the liability and protect your overall wealth. So some people say, I don't want all that hassle, so many LLCs, it's too much work, too much complexity. Well, let me correct that thinking. Here are some arguments against many LLCs. Number one, increased administrative burden. Now, managing multiple LLCs requires significant administrative effort, they say, including separate accounting, tax filings, and legal compliance, which can be time-consuming and complex. Now, my rebuttal is that administrative tasks can be outsourced to professional service providers, such as accountants and legal firms, and bookkeepers, which can streamline the process and ensure compliance. Now, here's an example. Let's say you have 4 rental properties, each one in a separate LLC for liability protection. Well, all of these LLCs here don't need bank accounts. An LLC doesn't need a bank account. The way I structure it is I have one central LLC that collects all of the rent, just like if you had hired a management company to manage all of your properties. So the rent payment goes to this one LLC, and this is the only LLC that has the bank account, your rent collector or a management LLC. If you like, you can have this LLC own all of these LLCs down here, or a separate LLC altogether that doesn't collect the rent. But the key thing is, now these are all single member LLCs and they don't have to file taxes. All the tax burden simply flows through to the owner LLC and then on to your own personal tax returns. So the argument that it's going to result in higher accounting costs is absolute nonsense, because there's no separate income tax filings for any of these LLCs whatsoever in most cases. In other words, single member LLCs, which all of these are because the single member is the master LLC up here, it minimizes the tax filings, and you can use accounting software to separate the expenses for each property. So you know which property is making you money and which property is losing you money. The next argument we hear against multiple LLCs and bank accounts is higher costs. This argument says that forming and maintaining multiple LLCs involves costs such as state filing fees and legal fees and accounting expenses, which can add up and become substantial. Well, we already covered the accounting issue, so the rebuttal is the cost of managing multiple LLCs can be viewed as an investment in asset protection and risk management, potentially saving you tons of money in the long run and preventing significant losses in lawsuits and legal fees. I mean, one lawsuit can cost you $100,000 or $200,000 alone or more in just paying for the attorneys to defend you. A third argument we hear against multiple LLCs is complexity in management. They say the complexity of managing multiple LLCs can lead to inefficiencies, increasing potential errors, and challenges in maintaining the oversight and control. My rebuttal of that is with proper organization and use of management tools and software, the complexities can be mitigated, and you can delegate clear roles and responsibilities to employees that can help ensure efficient management. Number 4, the potential for overlap and redundancy argument. There may be an overlap and redundancy in having multiple LLCs, leading to unnecessary duplication of effort and resources. My rebuttal is each LLC can be specifically tailored for distinct purposes, ensuring clear separation of activities and responsibilities, which can enhance operational efficiency and minimize risk. You talk about complicating things. Think about what happens when a lawsuit bomb gets dropped in the middle of your life. Number 5, the tax complexity argument. Managing taxes for multiple LLCs can be challenging, requiring specialized tax advice and potentially leading to overall higher tax preparation costs. Well, my rebuttal is the potential tax benefits and strategies available through multiple LLCs can certainly outweigh the costs, such as how we structured the rental property in the illustration, providing a better overall tax efficiency and savings. Number 6, the legal complications argument. Having multiple LLCs, they say, can complicate legal matters, especially in cases of litigation, mergers, or acquisition, where multiple entities must be considered and managed. My rebuttal is the proper structuring can mitigate complications, and the benefits of isolating liabilities into little cubbyholes and risks often far outweigh the potential legal complexities that one can drum up. Number 7, difficulty in consolidation argument. If businesses change or if their desire to consolidate, unwinding multiple LLCs, they say, can be administratively complicated. Well, my rebuttal is planning for potential future consolidation during the initial stages can ease the process of consolidation if that becomes necessary in the future. It's super easy to merge multiple LLCs. Additionally, the protection and liability offered by multiple LLCs often strongly justifies the initial setup. In conclusion, while there are valid arguments against having multiple LLCs and bank accounts, the benefits of liability protection, asset protection, tax optimization, and risk segregation can often far outweigh the challenges. With proper planning, organization, and the use of professional services, the disadvantages can be mitigated, making multiple LLCs and accounts a valuable strategy for many individuals and businesses. Please like, subscribe, and share this video. This is The Business Guy.